Good afternoon, all. Good afternoon, Jay Kumar ji.
Yeah, good afternoon. Good afternoon, Gopinder ji. Yeah,
Tejwani ji, in fact, today around 4950 participants are there online. And
yeah, yeah.
apart from that, we have a batch of 40 persons, out of whom around 27, 28 students are there in-house in the conference room itself where I am sitting. So,
Great, great.
yeah, this is for your information. And they all are actually uh, recently, they have all recently joined this CA course as well as the training after clearing their IPC exams. So I thought that they should actually be there uh, instead of online. They should be actually be there physically for attending this particular class. So with this, in fact, as I have already informed that today's class is on virtual digital assets and its taxation. Uh, so basically, three of our speakers, uh, CA Pratik Khona, as well as CA Neha Agarwal and CA Kamini Salvi, all from Mumbai, and all are part of the Kalani affiliate network firm Jaykumar Tejwani and Company LLP. So they will be taking today's class. And to introduce them in brief, Pratik is basically partner with Jaykumar Tejwani and Company, and he practiced at Mumbai since the year 2015. He has in-depth knowledge and practical experience in representing various domestic and international taxation matters before various tax authorities, including Commissioner Appeals, DRP, as well as in addition to normal tax matters and tax audits with a forte in the field of direct taxes. Neha is also associated with the firm since 2018 as integral part of the firm, and she is also a core member of the Institute of Chartered Accountants of India and a commerce graduate, and works on assisting the clients in representation before various tax authorities, income tax authorities, also assistant tax regulatory advisory and compliance services, and tax audit of various companies and firms. Kamini is also member of Institute of Chartered Accountants of India since 2020 and a commerce graduate from the Mumbai University. He has her area of interest in corporate taxation and audit and assurance services. He has practical experience in handling and representing domestic matters with various tax authorities and also into the audit and assurance services. So these are our three young speakers for the day, and we have very senior partner of and founder partner of Jaykumar Tejwani and Company LLP with us. So now with this, I actually hand over to the today's speaker as well as Tejwani ji, if you want to have any initial remark on today's class, and then we can proceed further for the class. Yes.
Yeah, good evening, everyone. And it's such an exciting moment that all of us are, you know, in for this session. Even from Delhi, I think on few systems, and in fact, we are also sitting in a conference room, except me, wherein a batch of approximately 25 people are watching this session live, and few of us are also on our individual laptops. The topic of VDA, virtual digital asset, is something which is of prime importance. Not just India, worldwide, it is gaining a lot of importance just because of the cryptocurrencies which are getting traded worldwide in big numbers. In fact, jurisdictions like UAE, they have already set up their own cryptocurrency counter or a kind of a regulatory authority. India still has not regulated it from a RBI perspective, but at least the income tax department point of view, they have now a clarity as to what percentage of tax would be applicable in case the VDAs are sold. Pratik, a very energetic, very knowledgeable, and a person with a lot of passion. He has created this beautiful PPT, and of course, the persons behind the creation of such a beautiful PPT is Kamini and Neha. And Kamini, Neha, you have done a great job. The PPT has come out very, very nicely. So, Pratik, you can just straight away take it forward. So, over to you.
Yeah. Thank you, Jay sir. Thank you, Bhupendra ji, for the brief introduction and for your kind words. So basically, as we all are aware, the last 2 years during the COVID era, most of the countries were under the lockdown, and that's when the actual surge in the transactions of be it cryptos or be it in the NFTs, it took the world over. Most of the people had their attention on these cryptos and NFTs and the other digital assets, and that's how the Indian government even thought of why not to channelize the income portion, and why not to generate a fair bit of share as tax money from the people's pockets as well, and hence then they tried to include this in our budget. And now since we are through the April 2022, so it is very much forming part of our budget. So yeah, so the first section of the presentation would be taken care by Kamini. So I'll just invite Kamini to take it forward from here. Over to you, Kamini.
Kamini, you're in mute. Kamini, you're not audible.
No, you're not audible.
Now it is. Now I am audible.
Yes, yes.
Yes, you are.
Thank you. Uh, Thank you, Bhupendra sir, Jai sir, and Pratik sir for this giving me this honor. So I am Kamini Salvi. Welcoming you all for the today's session. That is virtual digital assets. So Pratik sir, may I start with the PPT?
Yeah, Kamini, you can share the PPT.
Huh.
Just a second.
Is my screen too visible to all?
Yes, it is.
The finance minister has come with the taxation of virtual digital asset. This is a totally new concept for everyone. And there are many questions which are come to our mind regarding the virtual digital asset. So here we cover the various topics regarding virtual digital asset. That is, what's defined virtual digital asset, classification of VDA, tax rate, etc. This all are we are trying to cover over here. Before moving to the main topic, let's understand some technical words in an interesting way. We all are humans, and humans always love money so much that we always find an easiest way to earn more and more money. Can you imagine our own salary can make you earn $1 million? The answer is yes. I know it is little shocking, but truth is always bitter. A 22-year student sold his 365 days NFT selfie at $1 million. In the same way, one person called Bipul sold his 5,000 days digital image as an NFT of rupees $69.3 million. Jack Dorsey sold his first tweet as an NFT of rupees $3.9 million. How can we forget a Shansha of the Hindi cinema, Mr. Amitabh Bachchan? His total NFT collection is rupees 7 crores. Now, we all wanted to know what is NFT. Let's understand the NFT. NFT means non-fungible token. Now, what we understand what is meaning of fungible. Fungible means something which is replaceable, exchangeable, and identifiable. For example, if I give you 20 rupees note, in exchange, you give me two notes of rupees 10. This means a rupees 20 is easily exchanged and replaced with the two notes of rupees 10. This is called as fungible. So now what is meaning of non-fungible? Non-fungible means something which is not replaceable, non-exchangeable, and it is a unique. For example, Taj Mahal or Mona Lisa painting. You cannot find a second copy of Taj Mahal in the entire world. Let's summarize these two technical terms. If I have this one book, which is easily available in any bookshop, but what if I make some highlights and I put some stick notes in the book, then it become a unique book. Means it become fungible book. It's become a fungible asset. Hope so. We understood the half part of first technical term, that is non-fungible. Non-fungible. But we have let's understand what is meaning of token. Token means a proof of ownership. In practical life, if you own any house, then sale deed and stamp paper will reflect your ownership. As the same way, in a digital world, if you hold any non-fungible asset, then token indicate your ownership. Particular asset is assigned to the particular token. If you want to buy that asset, you should hold the token on the safe. Such token is stored in the blockchain. Now, our next technical term to understand what is meaning of blockchain. Before moving to the term what is blockchain, let it understand the need of the blockchain. For example, we all know the data is fully controlled and accessed by the management. So there are chances that data can be manipulated or modified. Since all data are centralized and controlled by the management, as a public, we does not have any access on that. Therefore, the reliability of such data is very less. What if the data is in decentralized mode? Decentralized form means all the transactions are accessed and shared with everyone. Such data is difficult to change. Hence, reliability of data is increases. This entire system is called as blockchain system. In other words, blockchain is a public ledger that stores the data of the transaction from one person to another person. The first person to launch Bitcoin through blockchain technology is Satoshi Nakamoto in the year 2009. Then blockchain in a more detailed form. One blockchain is a chain of blocks. One block contains one transaction. Chain of all transaction is called as blockchain. For example, if I have one bakery, then obviously I will maintain all the records of sales, purchase, stock, logistic details, etc. Such details are recorded in ledger. In the same way, in a digital world, all the cryptocurrency transactions are recorded in the blockchain ledger. In other words, a blockchain is a digital ledger that distributes across the entire network of computer system. Allows and other currency to operate without the need of centralized authority. Means everything in decentralized form. everyone can see the what kind of the transaction is going on. So understand what kind of the data are stored in the blockchain ledger. Blockchain. Number one, relevant data. Relevant data, you can say any kind of any transaction which is occurred in the blockchain. That is sales, buying, seller of Bitcoin, buyer of Bitcoins, etc. The another data is called as hash. Hash means unique code. Let's understand with an example. When we apply for an Aadhaar card, we have to give our biometric, on the basis of which one unique number is generated by the government. This unique number is called as our Aadhaar number. In a similar way, when we do any transaction in a blockchain, one unique code is generated. This unique code is known as hash. Number third data is stored in the blockchain is the previous hash. As the name suggests, the previous hash indicates the originality of the block. Means a next block contains the detail of the previous block by way of specifying the hash code. In my slide, you can see the first block has a hash code of 1Z8F. The same is indicated in the next block as a previous hash, which make it as a chain of block. Means each block have a details of the previous block. This entire details are contained in a blockchain. Let's moving to the next technical term. Let's understand what is meaning of cryptography. Suppose when I send any email to the client, so there are chances that details on the email is hacked by the hacker. He may read my information and can modify it. Therefore, there is no involvement of confidentiality of information. Cryptography is used to achieve the confidentiality of information. Sending message use encryption method. In simple words, the sender put a lock in his message. Encryption key have an algorithm which convert the plain message into ciphertext. For example, my plain message like a good evening will convert into ciphertext, that is A plus B plus C. If there is any hacker is exist, then he can read the ciphered message, that is A plus B plus C. But he never read the original message, that is a good morning. The receiver can convert A plus B plus C, that is a ciphertext, into the plain message, that is a good morning, good evening, by using the decryption key. This decryption key is only available with the receiver. This is how the confidentiality is maintained in the cryptography. After understanding the basic technical terms, let's come to the broad concept. What is meaning of digital asset? Virtual digital asset. Virtual digital asset is defined under Section 2, subsection 47 of the Income Tax Act, which says that any information, code, number, or token, not being Indian currency or foreign currency. Means Indian currency and foreign currency are definitely excluded from the definition of virtual digital asset, which is generated through cryptography means or otherwise, providing a digital representation of value, exchange with or without consideration. Non-fungible asset, non-fungible token, or any other token. Any digital asset as notified by the government. Means any kind of information, code, or non-fungible asset, non-fungible token, which have a value representative, which have a value attached to it, and it is generated to cryptographic mode, is known as virtual digital asset. Let's understand what is mean of Bitcoin mining. As name suggests, Bitcoin mining is a process of verifying the new transaction as well as process of which the new bitcoins entered into the circulation. Bitcoin mining is a process of creating a new bitcoin by solving the complex puzzles. In return, miners are awarded with a certain number of bitcoins per block. There are present 22 millions of bitcoins and the 2 million bitcoins have been left to be mined. Here, the top five cryptocurrency in India, you can say there is Bitcoin, Ethereum, Tether, Ripple, and Finance. These are the majorly deal top five Bitcoin currency, cryptocurrency in India. Let's understand the cryptocurrency price chart. This is a recent chart which I show you over here. You can see the market cap of the cryptocurrency is in trillions. How the cryptocurrency are violated, it shows that how the people are equally traded in the market. You can see that the price of the Bitcoin is 35 lakhs 88,000, and the and changes are very frequently. So this is the how the reason for major reason to taxable VDA in the corporate tax. Here the top five cryptocurrency exchanges in India, that is Bazaar, CoinSwitch, Kuber, Coinbase, Crypto.com, and Gemini. Let's understand what is the reason behind taxation of India. As earlier suggests, the popularity and increasing transaction is day by day increasing every day, growing market and gifting culture. People are giving crypto in the terms of as a gift. So this is the one of the reason to levy the taxation on VDA. Let's understand what is the difference between digital currency and virtual digital asset. The virtual digital asset is already explained. Let's understand the meaning of digital currency. Digital currency. Its currency itself is says that it is a fully and regulated by the RBI. The digital currency is a currency in a digital or electronic form, which is fully regulated by the RBI. Till yet, there is no such currency exist, but the government is proposed to introduce a virtual digital currency in the coming year. As per this section 115 BBH, it says that where the total income of any SSC includes income from transfer of VDA, it be computed as follows. Means if you have any income which is generated from transfer of VDA, then the taxable will be at the rate of 30%. Then applicable surcharge and health and education cess at the 4% will be applied. Here the taxable event is transfer. Let's review the definition of transfer. Transfer means any sales, exchange, relinquishment of asset, execution of any rights in relation to capital asset, compulsory acquisition of asset, conversion of capital asset into stock in trade, maturity or redemption of zero coupon bonds, or allowing possession of immovable properties to the buyer apart as a part performance of the contract. Any transaction which has the effect of transferring an immovable property. There is no as changes in definition of transfer, but in order to taxable the virtual digital asset, the taxable event is a transfer. The major difference let's understand the what if I transfer virtual digital asset before 31st March 2020 and versus after 2022. If I transfer any virtual digital asset before 31st March 2022, then apart from cost of acquisition all the relevant expenditure, indexation benefit, deduction under Section 54F and 80C will be allowed as a deduction. Also, it the balance amount will be taxable at the normal provision of income tax. Whereas, if I transfer virtual digital asset after 31st March 2022, then only the cost of acquisition will be allowed as a deduction. Now, I invite Pratik sir to continue further.
Thank you, Kamini, for touching up on the background and the history of the cryptos and NFTs and the other digital assets. Now, dear participants, as we are aware, there are five heads of income. So any income will be taxed under some of the other different heads of income under the Income Tax Act. Similarly,
Pratik, your voice is not there.
is it better now? Hello. Is it better now? Yes, sir. Is it audible now?
Pratik,
Yeah. Okay. I hope it's clear now. Yeah. S-
Pratik, your voice is not coming.
It's still not clear? Just a second.
Sir, you may check at your end because voice is clear at our end.
Hello, Ji. Can you hear me now?
Yes, Pratik.
Okay. Okay. Good. Thank you. Yeah. So for a person, if he receives any kind of VDAs as a part of his salary, as part of his CTC, so the same would be treated as a part of perquisites and will be taxable as income from salary. And again, the standard deduction will be allowed to him. The VDA component will be taxable at a slab rate as even the other part of the salary income for him. Now, Kamini has explained that the taxable event for a VDA would be the transfer of such VDA. So now suppose let us take an example. So Mr. X is an employee employed with ABC Corporation and he receives 2 lakh worth of bitcoins as a part of CTC. Hello.
I think you are
Yes, sir, you're
clear.
audible.
Yes,
You
Pratik.
can continue. Yeah, please.
Okay. Okay. Yeah. So now suppose Mr. X is employed with ABC Corporation and he receives lakhs of coins as a perquisite. So for him, these 2 lakhs will be taxable under the head salary. This will be taxable at his applicable slab rate and he can claim standard deduction. Now, after holding for some time, say for example, or after holding for a couple of years, Mr. X decides to sell these VDAs in open market for say 5 lakh rupees. So then, lakh rupees of VDA which he had received as a part of his salary, that will be considered as his cost of acquisition. He will be selling these VDAs at a value of 5 lakh rupees. and the resultant 3 lakh rupees will be taxable to him under the provisions of 115 BPH. So this is the salary part. Now let us move to us. Hello.
Pratik, yeah.
Bhupendraji.
So, in fact, you explained that suppose someone receive VDA as salary or as perquisite from the employer.
Right.
So, do we have such transactions presently in India? Are you aware of any of such?
No, Bhupinder, I'll clarify this. This is
Yeah.
more an international transaction as of now. So a
Yeah.
lot of
Okay.
employers in US, in Europe, and starting with UAE also. This is one of the uh, options that they are giving to the employees to opt for. India, we do not have any example as of now because it is not legally regulated by the RBI. But
But
as a
suppose
concept,
any.
yes, he has put in how it would be treated.
Okay. So, suppose any of the person whose salary is basically taxable under income tax law, and he is
Yeah.
basically employee of any foreign company, say a company which is situated in US or
Yeah.
Europe.
Mhm.
So that means for such person, taxability under salary head can arise. That is what.
No, let me again clarify.
Yeah.
So RBI has said that till we regularize it, Indian employees, if the home country or currently the host country is India, they would not be entitled to the cryptocurrencies. But yes, otherwise, suppose RBI allows it, then it would be considered as the perquisite in their hands at the time of the grant of such cryptocurrencies.
And suppose that employee is though working in India, but
Yes.
he receives perquisites in the form of VDA at in his home country. So then such situation may arise of
Yeah,
taxability
see,
of.
the clarification is that either your home country is India or currently your host country is India. In both these cases, VDA cannot be granted as a perquisite. But in case your host country is different, home country may still be India, but currently you are being hosted in US, then yes, you may be given the VDA as a perquisite.
So in that case, taxability as per Indian income tax law will arise.
No, in that
If
case,
that,
the taxability would arise as per the country of residence.
but he is getting salary as per salary while serving the company in India.
In that case, currently, of course, the example we have taken, because this example
Yes.
is exactly given in some of the opinions. But
Correct.
from the regulatory point of view, RBI has still not regulated this as a valid transaction.
Yeah, so we may say that still there may be some ambiguity with regard to this.
Yeah, that we are coming in the next slides, I guess.
Okay.
Yeah. So basically, the brief idea was to cover this kind of transactions, given that the new age startups might, in order to attract the talent pool, they might offer such kind of CTCs where even the VDS could be a part of. But as Jaisar also mentioned, that many of the organizations are still waiting for some clarifications by the government, by the Ministry of Finance and the RBIs. So that's the thing, yeah. So moving to the next head of income, that is the business or the profession. So if the transactions in the BDS are substantial and frequent, then it should be held that the person is trading in such assets and he is not holding such assets as the capital assets. So in this case, income from the sale of such assets should be taxable as business income. And the only allowable item would be the cost of acquisition of such assets as a business expenditure. Now, suppose there is a scenario where the receipt of the VDA is a business receipt. For example, if there is a professional person who is rendering professional services, who is taking up professional assignments on a freelance basis, and he invoices to his vendor a sum of 50 lakh rupees as a part of his deliverables, and he has incurred some around roughly expenses to the tune of 35 lakh rupees. Then the VDS amounting to 50 lakh rupees would be part of his business income, and he may claim the business expenses against it. So the resulting 35 lakhs minus 50 lakhs minus 35 lakhs, the resulting income of, that is 15 lakh rupees, would be taxable under the normal provisions as business income.
प्रतीक आप इसको एग्जांपल पे लेके जाओ. I think it's the next slide. Example. Yeah.
Yeah, so this is the first part of the example where the value of services provided would be 50 lakhs, which professional person has received it in terms of the cryptocurrencies or the VDS. He may claim the business expenses against the VDS amounting to 35, and 15 lakhs would be taxable as business income. Now, the same person, if he holds the VDS and he decides to sell it at a later stage, then the market value of the same VDS would be around 70 lakhs rupees. So the 50 lakhs rupees which he has already offered it to tax under business income under his under the normal provisions, that would be considered as his cost of acquisition against the full value of consideration of 70 lakh rupees, and the resultant income would be covered under the provisions of 115 BBH. Now the next kind of income is the capital gains. Now we are all aware that a capital asset, if held for more than 36 months, is treated as a long-term capital asset. And as the case may be, if held for a period of less than 36 months, the same would be considered as short-term capital asset. So similarly, the VDA will also be bifurcated as a long-term capital asset and as a short-term capital asset. The computation or the format of the computation of the capital gain will be the same as for the other capital assets, with a major highlight is that only the cost of acquisition of such capital asset would be the deductible item from the full value of consideration. Cost of improvement, any kind of expenses incurred on transfer of a VDA will not be available to the person, will not be available to the taxpayer. Only the cost of acquisition of a VDA will be available. Let us try to understand this by way of a better example. Basically, suppose if Mr. A has purchased 60,000 units of crypto at say rupees 67 on 16th of July 2018. Out of these 60,000 units, he has transferred 20,000 units in the previous year 21-22. Say the date of sale is 1st of March 2022. That is prior to the enactment of the Finance Act 2022. This Mr. A has sold the 20,000 units on 1st of March for a consideration of rupees 18 lakhs. He may have incurred brokerage rupees of 3140. So for him, the cost of acquisition would be 20,000 units at the rate of 67. That would be around 13 lakhs 40,000 rupees. Plus he has also incurred brokerage of 3140. So for him, his profit would be 4,56,000. But since this is prior to 1st of April 2022, he may also enjoy benefit of indexation. So for him, under the normal income tax provisions, he may enjoy the benefit of indexation, and hence his taxable profit would be around 2,79,789, and the same would be taxable at the rate of 20% as any other capital asset. Now Mr. A, out of the balance 40,000 units, he again decides to sell a part of 20,000 units in financial year 2022-23. Let us take the example that he sells these 20,000 units on 1st of April 2022. Now, in one of the previous slides, Kamini did mention that the prices of the cryptos, fluctuate highly. So these are very high volatile assets, basically. So within a month, the price crashes down, and he sells this at a consideration of rupees 8 lakh rupees. he again incurs some brokerage rupees. This would be around 2,140 rupees. So for him, at a personal level, he has incurred loss of around 5,42,140 rupees. But the date of the transaction is the 1st of April 2022, wherein Finance Act has already come into force. So he won't get the benefit of indexation. Mr. A won't get the benefit of any kind of brokerages. So he might have incurred a loss of around 5,50,000 rupees. Even if he would have gained from this transaction, then the same would have been taxed at the rate of 30% and not 20%. Now, in the previous slide, we saw that Mr. A has incurred losses of around 5,40,000. So what would be the treatment of losses? The government has clearly mentioned that set off from a VDA, the set off of a VDA losses will not be available from income, from other capital assets, or from other heads of income as well. Even the set off of VDA losses from one of the cryptocurrencies will not be available against the income of another cryptocurrency or another VDAs. Carry forward provisions will also be not available. So the government is very harsh and very stringent as to the provisions of VDAs are concerned. So none of the benefits with respect to the set off and carry forward is allowed. The last head of the income, that is income from other sources.
One issue comes which is regarding set off
Yeah.
of losses in one of the transaction of VDA with
Mhm.
the profits of the another transaction of VDA. So is that allowed?
That is not allowed.
Suppose
No,
Indraji, yeah.
suppose
Pratik, within
Yeah.
VDA, yes, it is allowed. Within VDA,
VDA. Okay, within
oh,
it.
yeah, within VDA it is allowed, but beyond VDA it is neither allowed to be carried forward nor set off during the same year.
correct. Yeah.
Right. Yeah. So moving to income from other sources. As we all know, property is defined under section 56 to 10. So the Finance Act has amended the definition of property to include virtual capital assets as well. Now, the finance minister had mentioned that if a person receives VDA as a gift, then the same would be taxable. But the VDA can be treated as any other form of asset which is received as a gift. So, as we are all aware that any kind of gift received from a relative is exempt under section 56(2)(7). Whereas, in case if any kind of VDA or the assets are received by a person other than the relative, then there is a exemption limit of around 50,000 rupees. The same will be applicable for a VDA. But only the person who has received these VDAs as a gift, he in turn transfers these VDAs. Then the provisions of section 115 BBH will be applicable to him. Again, the rule 11 UA, which determines the fair market value, will be applicable for VDAs as well. Now, what about the deductions? Whether the deductions would be available under Chapter 6A?
Pratik, can you elaborate just about that rule 11? That how it is being determined? It is market driven or
So
Hello.
11 UA is basically fair market value, and this being a listed kind of a
Yeah.
stock or a listed crypto. So exactly the way listed shares are to be valued, the same rule applies in cryptos as well.
so on that date at what
Investment.
market value this was there? So that will
Yes,
be
exactly,
recognized.
exactly.
So on crypto exchange, whatever is the value, that will be
So
treated for this
applicable
purpose.
fair market value. Yeah.
Yes, Pratik.
Sorry, I think I've got disconnected.
Yeah, Pratik, you can continue now.
Yes. So, deductions under Chapter 6A will not be available to taxpayers. Now, I invite Neha to take all the participants through TDS provisions. Yeah, Neha, over to you.
Thank you, sir. Now I will take you through the deduction of tax at source. Section 194S was proposed to be inserted in Income Tax Act for the deduction of tax for payment of consideration on transfer of virtual digital asset. This provision is applicable from 1st July 2022. Any person responsible for paying any sum by way of consideration for transfer of a virtual digital asset is required to deduct tax at source. The rate of tax applicable is 1% of the sale consideration. It is pertinent to note that the rate shall not be further increased by surcharge and health and education cess. Only the flat rate of 1% will be required to be deducted from the sale consideration. Now, what will be the time of deduction? The tax will be deducted at the time of payment by any mode or at the time of credit of such sum on the account of the resident, whichever is earlier. Now, if there is two scenario, if we receive consideration in money or consideration in kind. If we receive consideration in money, then buyer is required to deduct the tax at the rate of 1% on the sale consideration before paying to the deductee. In scenario 2, if we see if the consideration is in exchange or kind, if both are exchanging bitcoins or Ethereum, so will TDS will be applicable? The answer is yes. Now, who will deduct TDS here? As both are exchanging the virtual digital asset. So in such scenario, Bitcoin, both other parties are liable to deduct TDS. And before releasing the consideration, they should ensure that tax has been paid by each one. And value for this, for deducting of TDS, will be taken as a market value on the prevailing date. Now let's understand the limit for deduction of tax. If the consideration is below 10,000, no tax will be deducted under this provision if the consideration is payable by any person other than specified person and its aggregate value does not exceed rupees 10,000 during the financial year. And the second scenario is if consideration is below 50,000. No tax will be deducted under this provision if the consideration is payable by the specified person and its aggregate value does not exceed rupees 15,000 during the financial year. Now, who falls under the category of specified person? Any individual or HUF whose total sales, gross receipts, or turnover does not exceed 1 crore in case of business or rupees 50 lakh in case of profession during the financial year immediately preceding the financial year in which such virtual digital asset is transferred, or any individual or HUF who does not have an income under the head profit and gain of business or profession. So to summarize this, we can say that any specific other than specified person, which means company, LLP, firm, or any other person whose aggregate value in the financial year is less than 10,000, no TDS is required to be deducted. And if the person falls under the category of specified person, which means individual or HUF whose business or profession income is less than 1 crore or 50 lakhs, or the individual HUF who do not have any income from business or profession, the sale consideration should be less than 50,000, then TDS is not required to be deducted. Now, overriding effect of the provision. Section 1, let's first understand what is Section 194O. Section 194O, an e-commerce operator is required to deduct TDS for facilitating any sale of goods or providing services through an e-commerce participant. So, where a transaction is subject to TDS under Section 194O and 194S, tax will be deducted under Section 194S. As I have discussed earlier, the category of specified person. If a person falls under the category of specified person, then Section 203A and Section 206AB will not be applicable. Now, what is Section 203A? Section 203A says we required her TAN number for deducting tax under TDS, under any section. So if a person falls under the specified person list, no requirement of TAN number is there. Such deductor can use his PAN in place of TAN to deduct TDS. Now, what is Section 206AB? Section 206AB says special provision for deduction of tax at source for non-filer of income tax return. The provision of Section 206AB will not apply in case of specified person. Thus, even if the detectee has not furnished his return of income for a specified period, the tax, the tax shall be deducted at the rate prescribed under this provision and not specified in Section 206AB. If the payer is a specified person. If the payer is not a specified person, then Section 206AB will be applied. Now, what is Section 206AB? Section 206AB says if a person does not file his income tax return, he had to deduct TDS at a twice at the rate prescribed in the relevant provision of the IT Act, at the rate or rate in force, that is the rate prescribed in the Finance Act, or the 5%, whichever is higher. If a deductee does not furnish his or her PAN to the deductor, the TDS at the rate of 20% as prescribed in Section 206AA will be applicable. Here, doesn't matter if the person is specified person or not. In both the cases, deductee has to furnish his or her PAN number to the deductor. Now let's understand the TDS deduction with an example. If I have sold one VDA asset and the consideration received is 9,000 in cash and the PAN of the pay is available, in such scenario, TDS is not required to be deducted as the consideration is less than rupees 10,000. In second scenario, the sale consideration is 15 lakh and the PAN of the pay is available with us, but the payer is not a specified person. In such scenario, TDS at the rate of 1% is required to be deducted as the aggregate value of sale consideration is more than 10,000. In third scenario, the sale consideration is 15 lakh and the PAN of the pay is not available. As the PAN of the pay is not available, we need to deduct TDS at the rate of 20% under Section 206AA. And in the last example, if you can see, the nature of transaction is R, which means we are getting a sale consideration in kind. So in such scenario, before releasing the consideration, the deductor shall ensure that the tax has been deducted and paid in respect of such consideration. After that only, he has to pay the sale consideration to the deductor. Now, a very question arises whether we will get a relief under Section 87A or not. Actually, this is a question. It is an unanswered question till date. But maximum stakeholder view is to get rebate under 87A, yet a formal clarification is awaited from CBDT on this. Now, whether taxing the virtual digital asset is legal or illegal? Answer is no. Just bringing VDA under tax bracket does not make it legal. Taxing cryptocurrency does not give them legal status in the country. It is said by the Finance Minister Nirmala Sitharaman in the Parliament. It is just a country sovereign right to tax cryptocurrency transaction. It does not have authorization from government. The government doesn't recognize the asset as legal tender, much like the rules in the US, UK, and most other countries worldwide. Still, it needs the approval from RBI as well. Now, I request Pratik sir to take over from here.
Neha. Now, participants, we have gone through the history, brief background, income tax provisions, and the TDS provisions relating to VDS. What about the GST law? So, for a kind of for a goods or an asset be governed by the GST law, it needs to be classified. Classification as to either it should be classified with respect to goods or services or securities. So currently, the government is working on the classification part. As on date, there is no such clarification from the government. But in near future, we may get some classification aspect on this. Also, going by the talks in the industry, in the market, most of the GST officers are of the view that by its very nature, cryptocurrencies are very similar to lotteries or the gambling, which already attracts 28% of the GST. That is the highest GST rate bracket. So most of the GST officers are of the view, in fact, they have given the representation to the government that the BDS should be classified and should be taxed rather at the rate of 28%. But for a crypto exchange, crypto exchange is basically a similar stock
Uh,
exchange, similar to
Pratik,
stock exchange basically. Hello.
Pratik, yeah. I think here one clarification should also be given regarding whether this cryptocurrency is a currency as such. Because if it is a currency, then it will not attract the GST because currencies are exempt from any GST. But at the same
Yeah.
time, what is currency is also required to be explained by you because currency is something which has been issued by any regulator like Reserve Bank of India. So I think that definition is there of the currency in the GST law. So therefore, these
Clearly,
cryptocurrencies,
yeah.
yeah, therefore
Yeah,
these
go ahead, sir.
cryptocurrencies do not fall into the definition of currency. So as such, since it is not falling into the currency, that exemption of not not that exemption
Mhm.
of GST is not available to the cryptocurrencies. So on that, if you can you can enlighten anything.
Yeah.
So,
So
Bhupender,
clearly the
I think
government.
that was very clearly identified by Kamini that VDA is defined under 47A of Section 2. So, which excluded
Of GST law
the
of,
yeah of the income tax. No. So
of
it
income tax.
comes. This discussion is from purely from a GST. But your
Yes.
question and the answer that it is not a currency because virtual digital asset per section 247A does not include currency, be it Indian or foreign. But GST is representing it otherwise. So that is what, according to me, unless Pratik, you want to add something over here?
Yes, Jay sir. So yeah, taking forward your words basically. So crypto is just not very similar to the Indian currency or a foreign currency. So basically, there is no formal authenticity to a cryptocurrency. So as such, making it exempt is it's not even a question basically under the GST law.
No, Pratik, it is a digital currency. Please,
Digital currency,
what,
yeah.
yeah, what Bhupinderji said that in case it falls under the definition of the currency and digital, they are two different words. Digital is defined elsewhere. That's
Correct,
something which can be valued in equivalent currency, not otherwise. So it is not a currency per se.
correct. Yeah, agree.
Correct. In fact, if it is if we see uh, from the point of view of cryptocurrencies, this may be a virtual digital asset, but this is not a currency. But at the same time, where RBI is basically looking for to issue some digital currency, so in that case, if that currency comes, which will be regulated by the RBI,
RBI itself, yeah.
that may certainly fall under the definition of currency.
Yeah,
But
there
not
you are
Yes,
correct.
absolutely,
That is your.
absolutely. Yeah, so that in fact that is expected by the other stakeholders that in case if the RBI comes with the digital currency, that would be exempt under the GST. But yeah, for this matter, cryptocurrencies are not exempted. But as of now, we are still waiting for the classification part. So moving to the next slide. So the crypto exchanges are at par with the other stock exchanges in India. Now, the other stock exchanges are the services provided by them are clearly defined as the financial services, and they are attracting 18% of GST. So, similarly, any kind of services provided by the crypto exchanges would be classified as financial services, attracting 18% of GST. Now, as we just spoke about that the Finance Act 2022 did mention that the government is closely working with the RBI and soon they will be issuing a digital currency which would be again then regulated by RBI. Also, then a clarity will be required that whether the digital currency will be regarded as a banknote, whether that would be go hand in hand with the banknotes. So that is one clarification awaited. Now, the Ministry of Corporate Affairs last year they made some amendment to the Schedule 3, wherein they made some disclosure part mandatory that the companies will have to mandatorily disclose whether there is any kind of profit or loss on transactions involving cryptocurrency or the virtual currencies. Even the disclosure would be required as to the amount of currencies held as at the reporting date or the balance sheet date. Even the deposits or the advances from any person for the purpose of trading or investing in currencies will be required to be reported. Now, speaking about the challenges, there are actually too many challenges to speak about, but we have just jolted out a few over here. Now, first and the foremost is as we spoke about the taxation part with respect to the capital gains, I mentioned the fact that even a VDA would be classified as a long term or as a short term depending upon the period of holding. But why is it required? Given that it will be taxed at the same rate, 30%, then why is this required? So that is a question. On the TDS part, who will be responsible to deduct the TDS, whether it will be buyer or whether it will be exchanger. Practically, it is very difficult for the buyer to deduct TDS. At the most, an exchange can have a system in its place wherein it can regulate the deductible part on that, but a buyer, for him it will be impossible to make the deduction and to deposit this with the central government. So again, a clarification is required on this part as well. In case if the buyer is a non-resident, whether the TDS provisions will still be applicable, again a big question. So yeah, there are challenges on the regulatory part, on the taxation part. How do we deal with it? Only time will tell. So yeah, so that is the presentation. I'll just quickly invite Kamini to just summarize the presentation in quick 5 odd minutes. Over to you, Kamini.
Thank you, sir. So first, we understood the definition of virtual digital asset, where we come to know where we understood that any digital token, code, or information are not fungible token which are generated through cryptography mode are covered under the definition of virtual digital asset. Then after, we understood what is a blockchain technology, how blockchain technology works in a decentralized form. We understood what kind of data are stored in blockchain technology. Then we move to the taxability of VDA, where we understand Section 115 BBH and the taxability event of virtual digital asset. We understood by way of review definition of transfer. Further, we understood the receipt of VDA in a different scenario. That is, if VDA is received as a salary, as a income from other sources, etc. In order to trace the VDA transaction, government introduced TDS TDS under section 194S, that is deduction of TDS at the rate of 1% with effect from 1st July 2022. We understood what is the threshold limit for TDS. Further, we understand what is the meaning of specified person, which defined under section 194S. Then, TAN number is non-mandatory in case of specified person. Further, a higher rate of TDS for non-filer of ITR is not applicable in case of specified person. But if a person does not hold any PAN, then the high rate of TDS will still applicable even if the person is specified person. Then we understood that the VDA is still then the VDA is we understood the different scenario in terms of GST, and MCA also provide a mandatory disclosure requirement in respect of VDA. This all are from the summary. Thank you, sir. Either I request either we can start with a quiz or we can go ahead with the questions.
Yeah, something for the students to know, uh, especially for students. Section 247A, it defines what is virtual digital asset, and very important to understand that it is about any information code, token, which is, and of course, it doesn't include the currency. That is what is given there. And these information codes, tokens should be generated through cryptographic means. Second, non-fungible tokens means which cannot be fudged, which cannot be altered, which are unique in itself. They are they are part of the VDA. And another very important section which got amended, or which in fact got introduced, was section 115 BBH. It specified lot many things, but important that the VDAs are taxable. Any income arising out of transaction of VDA, they are taxable at 30%. And what would be the, how would we determine the income? It is the sale consideration minus the cost of acquisition. And the taxable amount would be the resultant figure, 30% applicable surcharge plus 4% HEC. And second very important point, which the same section has given, that we cannot set off any brought forward loss. So if there is a brought forward loss out of capital gains or any other business loss, etc., that cannot be set off. Similarly, if there is any loss which is available, that loss again cannot be set off against any other income. Neither can the loss out of VDA can be carried forward. This again is given in section 115 BBH. And then section 194S for students to note. Section 194S is something new which is introduced, which says that 1% on the gross consideration will be deducted with effect from 1st July of 2022. And 194S is an independent and overriding section as compared to section 194O, which anyways is there for e-commerce transactions. And section 56 subsection 2 clause 10, which talks about gift, is equally applicable on VDA. And another very important point, which in fact we discussed in brief, is rule 11 UA, and I'm referring to subrule 1, clause C, subclause 2, Roman 2. It says that in case of a listed stock or a security, the lowest price of the day would be considered as the fair market value. So you can go through all these sections and rules for better understanding, but these are the relevant sections and rules to be remembered from a basic understanding and examination perspective. So, Pratik, I think it was a very good representation and a good presentation. So, I'll hand it over to Bhupenderji for further words.
Yeah. Thanks to all the speakers, Kamini, Neha, as well as Pratik, and to Tejwani ji for summarizing the whole aspects about the digital virtual assets. And yes, looking to these aspects, of course, there are certain challenges which are not yet addressed because of the non-clarity on the law related to the first of all legality as well as whether the investment in virtual digital asset is illegal. So that is one aspect. But at the same time, the government feels